Hey everyone, and welcome back to Explain the Charts. Today is April 30th, 2025, and we're going to analyze the SPY, looking at both recent news and the chart data to help you make informed trading decisions. First, let's take a look at what's been driving the market lately. We've got ongoing trade war concerns between the US and China, weighing on investor sentiment. We're seeing updates about tariffs affecting corporate earnings and the potential for a slowdown in global growth. There's also a lot of anticipation surrounding big tech earnings this week. The market reacted negatively to supermicrocomputers warning about AI spending, creating uncertainty around that sector. So, let's see if we can correlate this news to our charts and figure out where the market's headed. Now, let's dive into the daily chart for SPY. Looking at the overall trend, we can see significant volatility, especially around early April 2025. We saw a sharp drop around April 3rd and 4th, suggesting significant selling pressure. However, the market showed strong recovery after April 7th, indicating dip buying. We also have more recent candle data from May showing prices around 550, but also some signs of instability. Let's zoom in on the more recent candle data. Looking more closely at the daily chart, potential support seems to be forming around the 505 level, with resistance around 540. The market struggled to maintain levels above 540. If we break below 505, we may see even lower prices. We need to keep in mind the overall macroeconomic environment, so keep tabs on the current news. Let's switch to the 1-hour chart to get a better grasp of recent price action. We can see the high volatility within specific days, suggesting intraday opportunities for traders. The 1-hour chart confirms the intraday volatility, with significant swings within single sessions. This could be related to earnings report releases or news about the trade war. Let's drill down further with the 15-minute chart, focusing on the last few days of April. We can see how the price is fluctuating in this time frame, with some evidence of short-term trends. The 15-minute chart highlights the micro-level price movements, allowing for day traders to identify potential entry and exit points based on short-term momentum. This might be interesting for day traders. The 15-minute data might be too noisy for long-term investors, though. So, what's our outlook for the SPY? Well, the current market climate is mixed. The ongoing trade war and uncertainties around tech earnings introduce downside risk. On the other hand, any positive surprises in earnings or a de-escalation of trade tensions could provide a bullish catalyst. Key price levels to watch are 505 and 540 on the daily chart, with possible swings within those levels. If the SPY breaks convincingly above 540 with strong volume, a bullish scenario becomes more likely. Watch out for strong resistance around 550, the high end of that previous candle data. However, if it falls below 505, we can expect a retest of lower levels. Stay tuned to Explain the Charts for more updates. Be sure to like and subscribe. Good luck with your trades.